Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 26th of July, 2023. And the time right now is 6:05 p.m. Central Time. I am the happiest guy. We're done with the FOMC for now another 2 months. I don't have to deal with that. What did Fed Chair Powell say? Well, number one, I did a whole write-up tonight in my report, a lengthy one on what was said, but I'll give you a quick rundown. Nothing has changed. The Fed is data dependent. No, they are not going that we go one meeting with the hike and then we pause to see what happens. Each meeting is live until the Fed thinks you don't have to raise rates. And at that point, they'll tell you they're not raising rates. But no, they are not going to do another one of those. Let's take a look and then we'll raise rates again. Each one is live now. That's important. Number two, they like the headway that's been going on. However, even with the tight monetary policies, the restrictive nature of them, there's still too much inflation in the system. They need to see the core inflation let go. They've won the battle in a large manner on the headline. It went from 9% to basically 3.5% or so. It's that darn core that they have to watch. What parts of it are sticky, where they go. They also are not trying to break the employment market. That will happen on its own. And we're not talking a crash. They already said gradually you're watching the amount of job offerings, the turnover rates, the rate of wage inflation has fallen dramatically. Now, when asked the question about the union settlements or tentative settlements, the Fed dodged the question. We don't get involved in those negotiations. I was waiting for somebody to ask that, and they did, and I appreciated his answer. I didn't know what he was going to say, but I thought that was good. They're not gearing in on the stock market. The earnings have been phenomenal. I mean, if you've been watching, yes, some companies are not doing as well as others, but as a whole, we're not talking 50, 60, 70%. As a whole, 80% of the companies reporting are beating. The economy is strong, my friends, and don't get away from that. A strong economy means inflation will be hard to beat down. Can the Fed go a lot higher? Well, people don't want to say that. The answer is yes. They'll go to wherever they have to go, and they are not backing off on that 2% goal. That is the part that I think analysts have wrong. Do I think it's realistic? No. Do I think they should give up on that? Yes. But do I think they will? No. That's where I'm at on all this right now. All right. So as we look at the S&P 500, remember we were just pointing at this? Are you going to go for these highs? Wow. Unbelievable. The market, sideways action right now. The pattern is one of higher lows, higher highs. What's the definition of an uptrend? That's it. Now, if you don't have the swing line on the chart, let me bring you right here. Where is it? It should be there. Higher lows, higher highs. Number two, we got to keep going with all this. Are you over the 18-day average? Yes. Is that over the 100? Yes. Is that over the 200? Yes. It's classic bull setup, and it's been this way forever. And by the way, if you'll notice, each break to the 18-day average has been holding ever since May. Once you got through this, you just lifted for the summertime and kept going. Wouldn't you like to have known that, in May? Where could this market go again? Well, Bollinger Band's your next resistance point if it wants to keep going up. And until you lose the embedded reading, you've heard me say this to you every day, when the red line closes under 79, I think we'll be getting our first correction. Until that, we grow to the sky, and that could be the 46 level. Got it? Next, in the NASDAQ. This did correct. The market went down, hit the 18-day average, and now it's going sideways. It's gathering itself. Get underneath, right here, the 15,484 level, and close under the 15,546 level. I'd get bearish. Barring that, take out today's high, and all of a sudden you can, again, that's an outside day down if I'm correct. Let's take a look and see if that is. Let's go to the day before's range. 15,549, 15,736, 15,515, 15,739. Absolutely. Take out today's high, and I will label that a trap. You heard what I just used, the keyword for the bears. Outside days down to take out that high, especially if they've been in an uptrend, our resumption of that, they're a bear trap, and they can often culminate in the market going to the next resistance point up there. So I'll look at that over the next 48 hours. In the Dow, look at this. Now, while the futures have had a little bit of a down, in the cash, you're 13 days in a row up. You haven't done that since 1987. What went on? What went on is the Dow was made up of 30 stocks. In those 30 stocks, what we saw take place, and this is so important, is that the market has decided that this was the laggard for too long. You do remember when this market was just sitting here going nowhere. Other indices were going higher. The AIs I can go with, they came alive. And all of a sudden, if you'll remember, the Russell 2000 came out of nowhere, and the meme people jumped in and away you went, all right? And now this market is having its day in the sun. That's what I think is going on. I think it's the only explanation that really makes sense to me. There could be others there, but that's what I think is going on. Until the red line closes under 79, I think the pros are buying this market, looking for the higher highs. Today was a buy day in just about all these indices as they were hitting a key number. My subscribers know what I'm talking about. I showed it to them this morning, but I have a policy I refuse to break. I don't go on a train track, wait for that train to come running at me, that bullet train, and think I can jump fast enough because I'm going to catch my shoe in a rail or whatever it is and probably get killed. It's happened to me too many times. That's no more than me saying to you, I don't know that you have these meetings and something that you never expect comes out in left field and you can't get out of harm's way. Now that this is out of the way, there's no harm now. Now I have until September 20th. I am the most excited that I have been in a long time. Now I get there, I get very serious about the charts for the rest of the summertime. Can't wait. In the Russell, embedded reading. Lose it, and I'm going to look for the first corrections in the market. Don't lose it. I'm still open for the upper Bollinger Band. In the bond market, it's out of the way, and the bonds aren't railing. They're just sitting on the 18-day average. The trend is down. The bias is up. Whenever you're over the 18-day average of closes, the red line, that determines bias. If you're over it, the bias is up. If you're under it, the bias is down. You could have the swing lines pointing to lower highs, lower lows, but if the bias is up, all it is a correction into the support zone. Got it? That's how you look at it. Identical here in the 5-year notes, and I'll give you a secret. Same in the 10. So now I look at the dollar index. I am hoping, fingers crossed, hoping the dollar oscillates here for just a little bit so I can get a pattern of lower highs, lower lows, and have a way to get short this market. All we did is come up to the neutral number, the 18-day average after having been down here. Now I need to get a pattern to work from. I don't have it yet. It's the flip-flop in the euro. I want it to go sideways here so I can get a buy pattern come up. Remember, tomorrow morning's the European Central Bank announcement. Miss Lagarde, super hawk, will come out. Will she surprise the market in anything she says? She generally doesn't surprise, but she doesn't go off track at all. So she's the best of the central bank speakers I've ever seen. She goes right up there with the best. I thought that way of her at the IMF. I think that way of her now. I'm a big fan of hers. In the British pound, okay, next week we get the Bank of England. And it's widely expected they're going to go up 25 to 50 basis points. Notice how the correction on this rally fell back to the 18-day average and went there and hung. So many of these markets are now neutral. I have market upon market upon market that has done this. And now I'm excited because from neutral comes a trend. So now I'm trying to wait and see what that'll be. Bitcoin, it's time to leave July. Just wanted to get it up here for you to see. August is where I want you to move. This has been coming down. Tomorrow's a big day, though, for all this. Why? Because at the House of Representatives in America, on the floor, they're going to introduce a bill to give control, CFTC, SEC, but the guidelines will be in there. And that is what the crypto industry's been lacking. They don't know what are the guidelines. What do you do? What is the law? My guess is it will not pass. It'll have a hard time in the Senate. It's just my guess, all right? It would be a boon to this if it did. Volume has fallen off as well if you're a trader in that. Now I've swung gears for you and I've put up the October Brent versus the October WTI. I told you I was going to do that. When you're doing this, it means you're always doing this against Brent. It means that what happens is as the numbers get smaller, it means WTI is caught up to the Brent. So it's been a stronger market than that. When we take a look at the trends, you have an embedded reading, bullish. The market's over all these numbers, and I have been prepping you that I think you're going to get the 18 to cross over the 200, the gray number. Tell me you're not within 10 points now, and that's going to be a big support number on breaks, but I'm not convinced you're falling back there. I happen to think you're going to get a surprise statement out of the Saudis that not only are they going all of August with a cut, but they're considering going September. And the market will look at that as something very positive. They don't have to do it, but they can say that they're considering it. WTI, same thing. So now we're looking at, and I wrote today about this in my report. You've got to read my reports because there's so much information in them. And I write, why did this market get strong? What's going on in the oil fields in America? What's going on through there? And I cover it. Now, you just crossed over. The 18 went over the gray, the 75.24. Another bullish number. Normally when you get a crossover, remember, it's crossing over today. Got to make sure it settles like that. You'll make a new high or go for whatever the high in the market is, the most immediate one, the peak in it. Does it have to? No, but it often happens. Where would you think I think major support is? You know it. But how do you get down that $3 is going to be the hard thing. So I'm not convinced you get there. Gasoline, the products, they're in such tight supply worldwide. This is not an American phenomenon. A lot of it has to do with what's going on in Ukraine, the war, how the oil is moved around, the different grades that are available, people not wanting or willing to buy the Urals that are out there. And I'm talking in Europe and I'm talking in America, and the impact of that on the world markets. Nat gas, the heat is here, but it's going to break now. So while you look outside, and in Chicago, it's going to be 97 tomorrow with humidity that's over the top. You don't want to be outside tomorrow. But the next day, it's going to be 80. And then we're going to stay in the 80s for a while. This market's had its one run. Now we have to see tomorrow, because we'll get the EIA number that's going to give us how much gas did we pull out. But for the time being, where do you think you're at? I'm going to call it a trading range between the Bollinger Bands back and forth. The support's right here where you're at, the 18-day and the 100, and the market's hit its targets and pulled back into support waiting for that. That's how I'm going to view it. So do you have to be in the market every day? No. Let me tell you where the biggest trades that I saw today were. It wasn't in futures. It was in spiders and ETFs. And I think tomorrow I'm going to get up even earlier. I think there's so many potential trades there that I hope I can write them all down before I start recording at 9 in the morning. That's how many I saw the shot of. I refuse to go into the markets in front of these reports, and now I'm ready to pull the trigger, right or wrong. So how do you get my reports? How do you get the Linn updates on all this? Because there's so much. You're only seeing here 6 boxes. There's like 12, I think, or so. Each one gives you a free offering. You come in, you click the blue on our website, you pick which ones you want. They're sent to you by email. Could it be any easier? Reports, price counts, special updates, the different courses that I have for free. The Arun indicator, that's a beautiful indicator that tells you time and price. As long as they keep expanding out, which they've been doing in the Dow, the trend keeps going. That's an indicator you look to see, hey, is this market now, it's making those highs, but suddenly the indicator will turn before the price. I've often seen that. Pivot points, how do you work with those? It's right through there. So here it is. You can either click all the way on the top of your screen. There'll be an icon there. It's free offers. Or you can go to our website, iraepstein.com, and click it that way. When there, just follow the instructions and away you go. I'm Ira Epstein, relieved. I'm glad this is done. I can't wait to get back in the saddle. I'm back from vacation. I'm refreshed. I'm dying to pull the trigger on a bunch of trades. You have a good day. I'll see you tomorrow.